Welcome back to the cryptoworld channel, everyone. My name is Josh, and this video will be an important one to watch all the way to the end. So let's get straight into the charts today. This right here is the 12-hour Bitcoin chart. And obviously, as I've been saying for a while now, the short-term trend is still bearish for Bitcoin. That is simply the reality at the moment. And in fact, if you've been watching my videos over the past 1 week, pretty much every single day, I've been comparing this price action to these previous bearish trends that we've seen in the Bitcoin price at the beginning of March and during the middle of February. Basically a short-term trend that lasts for a couple weeks on average, and that is pretty much exactly what is playing out as expected. But if you're looking at the 12-hour Bitcoin RSI, right now we're actually entering into oversold territories, which is a signal on the chart telling us that we could be approaching a bottom sometime soon. Now, it is important to mention that just because the RSI on the 12-hour time frame is in oversold territories right now, that does not mean we're at the bottom right now, because just as an example, on the 21st of February this year, the 12-hour Bitcoin RSI entered into oversold territories. But if you're looking at the Bitcoin price on that day, we still had one more dump to the downside before then we bottomed out for this short-term bearish trend. And we saw something similar on the 21st and 22nd of January this year as well. Basically, the 12-hour Bitcoin RSI entered into oversold territories, but then we had one more dump to the downside before then we bottomed out. And you can notice that second dump to the downside actually formed a bullish divergence in both of those examples. So that is just something that I'll be looking out for on the chart moving forward, because if we can form a bullish divergence in the 12-hour Bitcoin RSI, like these two previous examples that I just discussed, then our chances of a possible trend reversal in the shorter term are increased. But for now, this oversold indication on the 12-hour time frame basically means we're getting somewhere near the bottom, but we're not necessarily at the bottom right now, if that makes sense. And if you zoom out to the daily time frame, taking a look at our Fibonacci retracement tool from this January low up to the recent high, we've got some important levels of support to pay attention to, and one of the most important levels of support is of course the golden pocket. In fact, that is the most important Fibonacci level, and that is coming in at around $38,000 per Bitcoin. And also, what is very interesting about 38,000 is we've got a lot of support previously in around that sort of price range, around 37 to 38,000. And also, if the Bitcoin price just keeps dropping to the downside straight towards 38,000 without any sort of breather, then it's very likely that the daily Bitcoin RSI would enter into oversold territories at that stage as well. So around that $38,000 level would be an important price to pay attention to moving forward. And what is really interesting about the golden pocket sitting at around 38,000 is the fact that that is very close to this ascending line of support, which is coming into play at just underneath 39,000. And if you're looking at the larger price structure that Bitcoin has been forming for the last 2.5 months, then technically speaking, ever since that January bottom, the Bitcoin price, when you're talking about the larger trend here, has been in more of a bullish trend than a bearish trend over the past 2.5 months approximately. And then of course, during this larger price structure, we've had some short-term bearish and short-term bullish trends throughout. And obviously for the longer-term subscribers out there, you would know that I've been mentioning all of this pretty much every single day for many months now. But this ascending line of support coming in at around 39,000 give or take is an important level to watch, because if the Bitcoin price breaks below that ascending line of support, then this larger price structure is beginning to shift into the bearish direction for the first time in over 2 months. Because as I just said, ever since the January bottom, the Bitcoin price on the daily time frame has been constantly making higher lows, which is why it's very important for the Bitcoin bulls to defend 39,000 first of all, but then going back to this other chart, looking at the golden pocket sitting closer towards 38,000 and slightly down towards the $37,000 price range. Those are really the most important Bitcoin prices moving forward, because if Bitcoin breaks that golden pocket, then essentially we're forming our first lower low on the daily time frame, which means the larger price structure is beginning to change in the more bearish direction. But as of right now, at the time of recording this video, when you're talking about the larger price structure here, the multi-month long price structure, we are currently not looking too bad while we're above around 38 to 39,000. But obviously do not forget about the short-term trend still being a bearish trend, as I've been discussing for pretty much the last week now. And now heading into the Ethereum part of this video, a lot of what I'm about to say for Ethereum is very similar to what I just said with Bitcoin. So I'm going to keep this part of the video fairly quick. Basically, right here we have the 12-hour Ethereum chart. And of course, all three of these indicators, I'm talking about the parabolic stop and reverse indicator, the RSI, and the MACD on the 12-hour time frame are still pointing in the bearish direction. And of course, the price of Ethereum itself is forming lower lows and lower highs on the 12-hour chart, which means technically speaking, speaking, we are still in this short-term bearish trend. I know a lot of you don't like to hear that, but that is simply the reality at the moment. I'm going to tell it how it is. And if you're looking at the 12-hour Ethereum RSI, unlike Bitcoin, we are not oversold just yet, but we're getting pretty close and looking at some levels of support. In our Fibonacci levels, when you're drawing the Fibonacci retracement tool from the March low up to the recent high, we have the 50% level coming just underneath $3,000. But more importantly, we have the golden pocket coming in at around 2.8k. But when you zoom out to the daily Ethereum chart and bring out the Fibonacci retracement tool drawn from the January low up to the recent high, then pretty much right now the price of Ethereum at the time of recording this video is running into the 38.2% Fibonacci level, which is the second most important Fibonacci level, and that is coming in at just underneath $3,000, specifically at around 2,950. And the 50% level on this chart is coming in at around 2.8k. So these two Fibonacci levels are coming in at the same prices as these other Fibonacci levels, even when you're drawing from separate lows. But of course, the golden pocket on this chart has been lowered down towards around 2.6k, which is at around these previous lows. So around 2.5k to 2.6k will be a very important price range for Ethereum bulls to defend, because the 2.5k to 2.6k price range has the same significance as that $38,000 to $39,000 price range for Bitcoin, as I just talked about. Because while the price of Ethereum is remaining above around 2,500, the larger price structure here is not looking too bad. Of course, we are still in that short-term bearish trend, so keep that in mind. But the larger trend on the charts, the multi-month trend, is not looking overly bearish while we're above around 2,500, because that is the level where this larger market structure could start to shift in the more bearish direction. If, of course, we break these previous lows, which right now has not happened at the time of recording this video, but these are just some important prices to pay attention to moving forward. And in case you are new to this channel, crypto prices and the stock market are very correlated a lot of the time, which is why even as crypto traders or crypto investors, it's very important to at least keep an eye on what's happening in the stock market. And this chart right here, by the way, is the S&P 500 index on the daily time frame. And right now, the S&P 500 index is still in this pullback that we've been in ever since around the end of March. But with today's daily candle open, we actually opened below yesterday's daily candle, which means the S&P 500 index has created a small gap in the price. And usually when you're talking about the stock market, these gaps get filled pretty quickly a lot of the time, which simply means it is a high probability that the S&P 500 index could come back up and fill this gap, which means the S&P 500 could come back up towards around 4,474. And right now, at the time of recording this video, is testing the 38.2% Fibonacci level, which is the second most important Fibonacci level, and that is coming in at around 4,430. Now, if we see a confirmed break below that Fibonacci level with something like a daily candle close, then our next level of support to pay attention to would be the 50% level coming in at around 4,370. But the most important Fibonacci level is, of course, the golden pocket, and that is coming in at around 4.3k in the S&P 500 index. So obviously, as I've mentioned for a while now on the channel, the shorter term is looking a little bit more bearish than it is bullish. But when you're talking about the larger price structure, this hasn't changed, at least just yet. In fact, for as long as the S&P 500 index can remain above that golden pocket that I just mentioned, then we're still looking pretty decent here. We're not looking overly bearish when you're talking about the larger price structure, not the shorter term trend. Because of course, we still have a possible inverse head and shoulders pattern that is technically still forming, but it has not been confirmed just yet. I want to make that clear. And for as long as the S&P 500 can bounce anywhere above the golden pockets, then we can still play out this possible inverse head and shoulders pattern. But if we start breaking below the golden pocket, then essentially the right shoulder would become too big, and that would invalidate any chances of seeing an inverse head and shoulders pattern moving forward. And for any of the beginners out there, an inverse head and shoulders pattern is a bullish pattern, but in order to confirm the pattern, we need to see a bounce come back up to the neckline, which is coming in at around 4,650, give or take, and then we need to see a confirmed breakout above that level. So we definitely still have some work to do, but right now the larger market structure has not necessarily changed just yet. But in terms of the shorter term trend, yes, we are still in a shorter term bearish trend. We have not confirmed a trend reversal at the moment. And if you want to get extra updates on the market in real time throughout the day, make sure you follow me over on my Twitter, because also brand new CPI data, so brand new inflation data, comes out tomorrow, and I'll be covering that here on the channel. But the first people to know about it will be the ones that follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. And while you're down there in the description or the pinned comment, also make sure to check out my brand new Instagram, because in case you haven't already noticed with the background changes in my videos, over the weekend I was in Melbourne for the Formula One, so I'll be sharing more of that content over on my Instagram if you're interested. And tomorrow I'll be back with the normal 2 uploads as usual, and they'll be coming out earlier in the day. But if you found this video useful, make sure to drop a like down below, and if you're new to the channel, make sure to subscribe with notifications turned on for more updates just like this every single day. And before you click off, if you want to make more money in crypto, whether or not prices are going up, down, or sideways, then these 2 videos popping up right here on your screen are definitely for you to watch. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.